I'm Jason Landro. I'm one of the founders of Nectar. We're a digital marketing agency that focus on Amazon marketplaces. We do everything from creative to marketplace management, advertising, retail media. We build websites and do all the digital marketing surrounding that. We have an analytics platform called iDerive surrounding Amazon that we use to measure incrementality and find new revenue opportunities. And so what we are talking about today. So as part of our business, we do a lot of advertising audits, and we tend to see the same problems pop up over and over again. And most of the budgets that we audit are between about anywhere from $500 a year to tens of millions of dollars a year. So it is a wide range, but they're kind of healthy budgets. And we see these same common issues, I would say, on 90+% of these audits. So we're going to dive into them today. What you should expect to take out of today is tools you can go back to your business and audit, or at least start to look for these areas and see if there's room for improvement. So we're hoping that our expectation is that you find this webinar to be very practical. So our guest today is Harriet Carson, and I'm going to let her introduce herself.
Hey everyone, thanks for joining. I'm Harriet Carson, the VP of Advertising at Nectar. I've spent really over the past decade building and scaling Amazon teams and programs across sponsored ads, DSP, as well as Amazon Marketing Cloud, which we'll get into. I also have a background in, broader digital marketing as well as operations that allows me to really connect Amazon into a full funnel omnichannel strategy, as it should never really live in silo. Nectar works across most major verticals and business models, and while every brand has its own category dynamics and competitive set and growth goals, there is a consistent set of foundational principles that really drive performance on Amazon. Today's session is focused on those core tactics. They're really the building blocks that we see behind the strongest, most scalable Amazon programs and marketing plans, and the levers that unlock incremental, sustainable growth. So I look forward to just running through all of these with you.
All right, so we're going to dive right in. These are the top 10 kind of areas that we see are common issues, so to speak. One, wasted ad spend. So that's spend without sales. Everyone's generally aware of this. I think people get lost sometimes in the nuance, and we're going to get in today that really the biggest miss here is about philosophy in terms of how you're setting up your campaigns to minimize wasted spend in the first place, leveraging search query performance report to stop cannibalizing your organic sales, so measuring your branded purchase share and the impact of your advertising on your branded purchase share, leading more into exact match. As your account matures, you should know what keywords work, and your advertising foundational setup should be aligned to that, as opposed to spending a lot of money in broad and phrase or auto. Optimizing your ad format mix, so not just being in sponsored products, but diversifying out of that, depending on your category and budget and the depth of your portfolio. Leveraging AMC Audience and Insights. It's crazy to me that so many brands still are not using AMC. Yes, there are advanced ways to use it, but there's a lot of simple ways to use AMC that brands are not capitalizing on. It's a huge miss. Implementing product targeting and conquesting. This one still gets me. We presented an audit yesterday for an account spending over $5 million a year that really wasn't leveraging product targeting and conquesting properly. And almost no one is immune to it. It's low-hanging fruit. ROAS. We have moved away from ROAS being the North Star yet because of the amount of data that Amazon provides and really a lot of marketplaces provide. Yet there's still a lot of brands that are anchoring to ROAS or in this case, ACOS. It's not the right KPI anymore. Segmenting campaigns by goals. There shouldn't be mixing branded or non-branded. That's simple, but what about, we We see companies place top of search modifiers in campaigns that are not dedicated to top of search. You start to really muddy the waters, right? So that's just a couple of examples. Improving your conversion rate. Advertising is the lever to send traffic. It doesn't convert consumers. So your PDPs have to be retail ready. It's not just about sending traffic, and then building a year-round strategy. Obviously, this differs for every company, but you need to really plan ahead and think about how to allocate your budget and what's going to work and what's not going to work, to really map that out appropriately. So with that, we're going to dive in to each one of these topics. So I see there's already some questions. It's great. As we go through this, let us know if you have more. We'll make sure to keep these top of mind and dive in. So first, eliminating wasted ad spend. Harriet, what do we typically see here?
Yeah, so one of the most consistent patterns that we see when brands really start to hit a plateau is not actually always a lack of budget, it's misallocated spend. I frequently say it's not always about spending more. Sometimes it is, but it's about spending smarter than the competition and really more effectively and efficiently. Across almost every single audit that we run, we find a meaningful percentage of spend going towards search terms or product targets that just have never converted. And in some accounts, that number's 20%. In others, it's much higher. This usually comes from over-reliance on broad match and auto campaigns without strong guardrails. I'm not against discovery tactics. They're important. They help, surface new demand, but they should operate as controlled environments as harvesting campaigns. Once a search term or a product target proves that it's a winning term that converts, you should be moving that into exact match. Broad stroke targeting should be used to capture anything missing in your manual or exact match campaigns. Discovery can inform strategy, not, consume the majority of your scaling budget. So, that's not to say that we at Nectar don't have any wasted spend. Typically our accounts see around 5 to 8% as we're testing in an account and, testing net new terms or launching new products. That can fluctuate, but we have pretty tight guardrails and automation around to minimize this. What we focus on is separating exploration from monetization, right? So discovery campaigns have clear rules, zero conversion look back rules, aggressive negatives, harvesting routines. Then proven search terms graduate really in controlled exact match environments where we can scale them intentionally. This significantly reduces your wasted spend. There's a lot of the times that I'm doing audits and there's 70% of your terms aren't converting, only 2% of exact matches, and then it's like 90% in broad. So reclaiming wasted spend, it really enables incremental growth without requiring additional budget. You simply reallocate towards areas that are already demonstrating purchase intent. That structural discipline alone can really unlock immediate efficiency and incremental growth. And then I see that LT asked a question around, I think it's key to break down wasted spend to buckets of spend that is not returning results, plus spend that is just not a sufficient level to see results. Would love more tips for driving the move away from ROAS. We're going to get into the moving away from ROAS as a North Star in the next couple of slides. But yeah, wasted spend, how I look at it is typically the best way to look at it is you can look at it as a whole of anything that's not converting. And there's different look back periods. Like if you look at the past 7 days, it's probably too short of a look back period to really know if a term is going to convert. You should at least do like a 60-day look back period to see if something's typically wasted spend. Also, if you're a higher price point or more premium product, it might take more clicks to get a conversion. So you're going to want to put a click threshold. So typically across all of our accounts, and again, this can change, but the average is every 10 clicks at minimum should lead to a conversion. So that's a good place to start in terms of rules. And if you're implementing automated rules to eliminate wasted spend, you can start with if something has 10 clicks and no conversion in the past 30 days, reduce bids by 50%. And then 2 weeks later, if they still have no conversions, then you can pause it. And I think that it's important to note that you don't always have to pause a keyword. If you're leveraging like phrase match or exact match, you can just negate the search term if the search term that's resulting from the keyword that you're targeting because of the match type is irrelevant to your brand.
Sorry, struggling to unmute. I think also it's not so much about buckets of spend. Something Harriet actually mentioned on a call the other day, so I'm stealing her thunder here, is as we go deeper and look at consumers that just click and don't buy, and then if we retarget them, are they purchasing, the purchase rate, which we do using AMC, the purchase rate is really low, like 10% or less. So ultimately that spend is not efficient. So in other words, even though we know that consumers often don't just click once and buy, as you start to look at this wasted spend and trend out whether consumers are coming back and buying, you see that they aren't. Really, which makes sense because you should know what terms are proven, which is why Exact is so efficient, and be funneling in consumers there and having limited budget for discovery, and then instead focusing on reaching more consumers who are in aisle in market, or focusing on generating more demand for your brand, as opposed to trying to expand on tangential keywords. So kind of moving to the next point, which is ensuring that you're not cannibalizing organic sales. This is an area where Amazon provides a lot of data through the search query performance report, and Harriet's going to go in and explain that. We see that a lot of brands, agencies talk about cannibalization as though it's a feeling, the wave that you have to balance and ride based on intuition and experience, and that's not true. There's data that Amazon provides in brand analytics that you can leverage to determine this with pretty good precision. Yeah, so Harriet, do you want to dive in and explain that process?
Yeah, so search query performance is one of my favorite topics. For anyone who doesn't know, this is a report, like Jason said, within brand analytics. It came out, I believe, in November of last year, so it's still relatively new, and beginning of last year, and it was only released for 3P brands. Amazon is slowly rolling this out for 1P brands. So if you haven't seen it, it should be available soon. In my opinion, it's the most powerful data Amazon has released since Amazon Marketing Cloud, and I actually think my new favorite is the reporting beta, which we'll likely have a separate webinar on. But search query performance, essentially what it does is you can see on a brand level and on a product level all of your impression metrics, click metrics, and your share on a weekly basis, monthly, or quarterly. So you can get down to the search term level and you can really see what's your impression share, what's your click share, what's your add to cart share, what's your purchase share, which is an indicator of market share, right? Purchase share would be, say, it's the term coffee. Every week, out of everyone typing in the term coffee, what percentage of users are buying from your brand versus competitors? So search query performance, it fundamentally really changes how we think about Amazon strategy. Instead of looking at campaign level performance, we look at demand and share at the query and the product level. It also gives you search volume, like true search volume and not just search frequency rank. So it unlocks that data. That shift is really important because it moves us away from optimizing metrics and towards understanding market position. We're also able to really tie together the relationship between paid and organic, which historically has been very, very difficult on Amazon. With this data, we get to unlock trends around your brand's position in the category, where your brand's winning, where there's opportunity for growth and to invest. We typically analyze 3 things in search query performance. First, where do we already have strong purchase share? For example, this is great for branded terms. Like if we're already dominating a branded term and we're winning 99% of the purchase share, continuing to pour incremental dollars into those branded terms rarely is going to drive any meaningful growth. It's an opportunity to really shift dollars into non-branded, scale back branded spend, and drive net new sales. Then what you can do is you can understand how much investment you should be spending on branded terms based on how that purchase share is moving. So if you're spending $100,000 a week on branded terms and your brand purchase share is 99%, and then you cut that spend to 50 the next week and your brand purchase share moves from 99% to 98%, it's a very minimal decrease, meaning that, competitors were, when people were typing in your brand, competitors were getting 1% of those purchases. Now it's 2%. Depends on the volume. Search query performance allows you to see how many purchases actually, total purchases come from that term. But typically that like 50K that I just mentioned is going to go a lot further targeting net new terms or targeting category terms to drive incremental growth. If someone's typing in your brand name, they're likely buying from you. They're specifically looking for you. Every brand is different, though, based off your price, your competition, the size of your brand. And also, if you're investing a lot of dollars in external marketing, you want to make sure that you have coverage on Amazon because you are paying for that branded search somewhere, even if it's not in the Amazon ecosystem. So, it's not a one size fits all, and that's why this data is so valuable. There is a science to it, and you can really understand your sweet spot and test different spend levels and see how that impacts your total share for brand. The second thing we really look at is where is search volume high, but our impression share is low, but we also have a decent purchase rate. This is often a very clear exposure gap, and it identifies where we could be leaning in to untapped opportunities where we could be, gaining more share and visibility. And then third thing that we're mainly looking at is where are we, getting impressions, but failing to capture purchase share. That usually indicates a conversation around conversions or like the foundations not being right, or it's tied to like pricing, reviews, or PDP quality. The goal isn't to chase every query. It's to identify where incremental share gains can really materially move revenue. And then search query performance helps us avoid really paying for sales that we would have captured organically anyways, and instead focus investment where we're under penetrated relative to real demand.
Yeah, and I think so. One of the challenges brands face with this data is that it can be hard to harness. And what I mean by that is the output in Amazon is not as clean as it is in our internal dashboards. That being said, we're not the only company that has this data trended and categorized. So there's lots of other options out there too. You can put it together manually. You can download it and put it together. But I think my suspicion is that a lot of brands aren't utilizing this data because they're not compiling it in a way to be able to track these metrics. But if you have to invest, if you're spending tens of thousands of dollars a month on branded search, and it's not incremental, spending $1,000, $2,000, $3,000 a month on a tool, is well worth it because you should be able to measure what amount is truly incremental and then reallocate the rest in, non-branded category terms. But that's not the only use of this data. That's just one use of it. So I would challenge brands and agencies to think about, how can they actually leverage this data to grow incrementally, as opposed to just focusing on a ROAS number for a keyword or a campaign.
Yeah. You do a lot of really valuable data, but they make it a little bit difficult to trend over time. So what we've allowed to do there is, you can kind of see in the charts, they're a little small, but we're overlaying spend with all of your key metrics in search query performance. So we have it in chart, or we have a multi-line graph where we're comparing, the relationship between spend and then that search query data. And then you can see there's a drop-down metric. These are, just some, not all of the metrics that are available in search query performance, but you get search volume, brand share, your brand conversion rate versus the category conversion rate. So how are you converting compared to the competitors? You get like median price of a product versus your ASP. So it's pretty granular. You really get to unlock a lot of insights that we weren't able to see otherwise. And if anyone on this webinar is familiar with brand analytics and you're on vendor, you probably know that there's a top search term report where you can only see your click share and your conversion share in a search term level if you're a top if you're in the top 3 clicked products, this allows you to get past that, and doesn't matter how much share you own. You could be the 100th top clicked product and you still get your share data.
There's a lot here. We could probably spend most of our time just talking about search query performance data and how you can use it. Maybe that should be a separate webinar. But we're going to go on to the next topic, which is shifting your strategy to exact match. I know this is one of Harriet's favorites, so I'll let her walk through it.
Yeah, so exact match is often, I think it's often misunderstood. It's not conservative, it's strategic in my opinion. Once a search term has really proven that it can drive conversions, it deserves its own environment, right? That gives us full control over bids, budgets, placement strategies, really at the search term level. We know what the top terms in each category are. We just showed you in search query performance. We have all of the historical data to see where you've converted, both organically and from ads on a product level. And we also know who your top competitors are. So use it, right? Don't rely on Amazon's algorithms to determine where your ads are being placed, because it creates inefficiencies. And then there's a lot of things you can also do with exact match to make sure that you're not just doing exact match, but you're overlaying more advanced strategies on top. So, we strongly believe in isolating top performing keywords into, in some cases into their own campaigns or tightly structured exact environments. That allows us to really scale winners without interference from broader targeting types or, competing for budgets. You can also only see placement performance on a campaign level. I think that might have changed with the reporting beta. Prior to like a month ago, you could though, where if you have a single ASIN in one campaign, then you can see if it's performing best on top of search, rest of search, or product detail pages, and then you can manipulate your bids and your top of search and rest of and product pages bid adjustments to make sure that you're essentially showing up where you're reaching the highest intent people to purchase. There's also a compounding organic benefit when you're using exact match. When you constantly win auctions on high intent queries, your organic rank does start to strengthen. That creates a flywheel effect. Discovery surfaces opportunity, and exact match really scales opportunity. And over time, that structure makes performance far more predictable and far less volatile. We always say ads exist to propel your organic growth, which is why we don't recommend using ROAS as a North Star, which we'll get into. But the goal of ads is really to increase your organic rank so that your total sales are increasing and your organic sales are increasing. And exact match is a way to do that by just having complete control over your strategy. I still recommend using some phrase and some auto for net new term and discovery campaigns, but the majority of my keyword targeting is typically going to be exact match because, we have the data to know what we should be targeting, like I said.
Yeah, and I think this one can be uncomfortable for brands. But as you start to look at the data, it's very consistent. We see that, and we went over the wasted spend, that exact match typically has the least wasted spend. The broad match and auto tend to have the most. And there's a reason for that. And so you don't, as your account matures, you don't need to be doing a ton of discovery. You have all this reporting from Amazon that shows you what is working and what isn't working at a keyword and target level. And so it's about leveraging that data, targeting those terms or targets specifically, and then limiting your budget on discovery. Obviously, new products come on or new trends happen, and you want to have the mechanisms to be able to discover them, but it should be a small portion of your budget, and then you can scale up exact accordingly. And if you're in a place where you want to create more demand, it's not about taking a shotgun approach with broad. Rather, that's what you should be doing through the DSP and generating that top of funnel awareness. So moving to the next one, which is optimizing your ad format mix. I think, Harriet, we've seen that brands have definitely matured here, but there's still a lot of room to go, right?
Yeah, I think that, Amazon's evolving. It seems like almost, every couple of weeks they're coming out with a new feature. And, even like 3 or 4 years ago, you could almost get away with just doing search. Now, there's a big emphasis on creative and upper funnel. And, if you're not paying attention to upper funnel or you're not activating it, some brands aren't ready for it, I will say. Most brands should be doing something there because it's going to help the longevity of your brand and increase long-term growth. But every ad format on Amazon, it really plays a different role in the customer journey. So sponsored products primarily captures demand that already exists. Sponsored brands and sponsored brand video influence consideration and reinforce brand positioning. You also get some premium placements there, and with video, the goal is typically to engage customers. And then DSP expands reach and allows us to really shape demand earlier in the funnel, really builds the funnel. When brands over-index on a single format, they eventually hit a ceiling. So if you rely only on sponsored products, you're limited by existing search volume. If you rely only on DSP without strong search coverage, you may create awareness but fail to convert because people can't find you. So you need to really have a cohesive strategy and an ideal marketing mix. I've done a lot of audits where brands aren't running any sponsored brands or any sponsored display. And typically when consumers are exposed to multiple different ad types, whether it's sponsored display and sponsored products or sponsored products and DSP, the purchase rate is higher. So we think in terms of layering. So capture existing demand, influence shoppers evaluating options, and then create demand earlier in the journey. And then track this all through Amazon Marketing Cloud, which we'll get into. The optimal mix, it differs by category and by your market position, but a diversified ad format and strategy consistently supports this durable growth, and you're able to track it through AMC to see how incremental your spend is at every level of the funnel with every campaign type and how they work together to drive conversions.
Yeah, I think a lot of this is about also testing, right? And being willing to fail or not have it be perfect. It doesn't mean you have to overcommit from a budget perspective. Go ahead. Sorry.
I'll also say I notice a lot in audits. I notice a lot in audits that if something is working really, really well on one ad type, like sponsored products, test it on sponsored brands and sponsored brand videos if you have the assets. More times than not, when I'm doing an audit, some of the top converting terms, either on sponsored brands or sponsored products, they're not being tested on the other formats, and you should be going after those terms on both if they're proven conversions.
All right, so moving to number 5, leveraging AMC audiences and insights is a really hot topic. AMC is kind of relatively new in terms of being rolled out universally and in console, but we're still seeing a lot of brands not using it today and agencies.
Yeah. Amazon Marketing Cloud, it really changes how we approach strategy because it gives us behavioral visibility beyond standard reporting. It essentially is a clean room of data. There is templated queries and custom queries using SQL. It used to all be SQL when it was released in 2019, but it's actually extremely user-friendly now. I think Amazon Marketing Cloud, it can come off as intimidating, but it's really, really valuable. And with templated queries, it's pretty self-explanatory to run. It's also in the ads console today now, so it's very easy to access. If you have an ads account, even if you're not running DSP, you have access to all of these audiences and all of these additional measurement reports that are templated. So what it does is it really allows us to analyze how shoppers move through exposure paths and what combination of ad types actually lead to purchase. We use AMC to build custom audiences based on meaningful signals too, right? Amazon just released AMC audiences where you can target prior viewers or high value customers, abandoned cart customers, users who, viewed your storefront and didn't purchase, can target lapsed customers up to the last 5 years, or past subscribe and save customers that have dropped off, or shoppers exposed to specific ad types. The list really goes on and on. There's so many different tactical use cases that come into play here, and it's going to differ for each brand, which are the most important to use. A CPG brand and a kitchenware brand, they're probably not going to use the same AMC audiences, but they're it's just as useful to both. So this really allows us to imply more intentional targeting and bid strategies instead of relying solely on, broad in-platform targeting. AMC also, again, unlocks really deep measurement. We can evaluate new-to-brand behavior, analyze cross-sell opportunities, and really better understand lifetime value dynamics, especially for 1P brands. It becomes less about isolated campaign performance and more about understanding how the ecosystem works together. So using AMC, Path to Purchase report, you can literally see if someone is on Prime Video and sees a streaming TV ad of yours, then they go to, ESPN.com, they see an online video ad, then like weather.com and they see a display ad, and then Amazon, they click on a sponsored product. You can see that entire path, and there's different attribution models that you can look at. So we typically will look at multi-touch attribution for that. But if you're not using AMC, most of your competitors likely are, or the top competitors in the space are, and you really need it in order to compete at the level that they are, because it's a report that should be used and is very important to analyze the incrementality of your spend. DSP, the typical metrics that you're gonna see, they're kind of vanity metrics with the attribution model. You need to be looking at it and how it's moving users down the funnel, because DSP doesn't net out straight ROAS.
Yeah, and I mean, there's a lot of different use cases of AMC, and we will definitely put out some more content, whether it's a webinar, educational series on it. I just want to make sure that we're getting through everything. So moving to 6, implementing product targeting and conquesting. Harriet, do you want to dive in here?
Yeah, so product targeting and conquesting. There are a lot of audits, I would say at least 20% that don't do much product targeting or aren't doing like any sponsored display. Not every shopper starts with a keyword. Many shoppers begin on a product detail page where they're comparing features, pricing, and reviews. Product targeting allows us to intercept those shoppers at a critical evaluation stage. So we look for conquesting opportunities where competitors are structurally weaker. That might mean they're higher priced, they're lower ratings, they have poor imagery or like limited content. That's like the low-hanging fruit. Those moments create an opportunity to present an alternative, a better alternative ideally. You might have more reviews or a lower price point. Another hack is that, if your budgets are small and you're in a really saturated categories where your competitors have like very deep pockets and there's just no way you feel like you can compete, and let's say CPCs are like really high, product targeting is a great way to reach users in the consideration phase of the journey without having to pay those high CPCs. So, competitors essentially would be paying to get those users onto their listings, those high CPCs for those, broad non-branded terms. You target those listings at a lower cost and you're not paying those $10 to $15 CPCs. And then you're reaching users who are actively browsing and considering buying a similar product. So you're really intercepting them. So product targeting, it does not have as much of an impact on organic rank than keyword targeting, I will say that. However, it's still a very important piece of any brand strategy. I think of product targeting more as a ROAS play than keyword, just because it doesn't have as much of an impact on organic rank. But if you're not leveraging this, your competition has a leg up, and it's certainly targeting you. About 10% of brands that I audit, they don't do any brand defense either with product targeting, which there's two types. You can target your competitors' product detail pages, or you can target your own to defend your product detail page and push competitors off. Both are very important. If you're targeting your own, it's actually one thing that you should be looking for is how defending your own product detail pages is impacting your conversion rates from non-branded terms. Because you don't want to, just like the example I just talked through, you don't want to be paying all this money on, really broad category terms to get people over to your page and then a competitor to steal them at the point that they're ready to make a purchase, right? So defending your brand is important too. We also use product targeting on the DSP to re-engage shoppers who, may have viewed your products and didn't purchase, or may have viewed competitors' products and haven't purchased. These are like really high intent prospects who have already demonstrated interest. So these would be custom lists. But by reintroducing users who have expressed interest in the category to your product with strategic messaging or competitive positioning, we can capture share more efficiently than, broad prospecting alone.
Yeah, and also, you are spending money to get people to your product detail pages, so you don't want them to leak off with that going on to other competitors' pages who are targeting your product pages with product targeting ads. So it is important to defend that real estate. The CPCs for that real estate are also cheaper. And keep in mind that you're not getting charged unless they clicked. It's not an impression-based cost model. So, on the whole, you're also defending that real estate and making them stay on your pages, and it doesn't really cost you that much to take over the spots. But Amazon's auction also gives the brand preference for its own product detail pages.
Yeah, for sponsored products, it's pay per click. For sponsored display, there are goals you can set to have it be cost per click, and display ads do not get clicked on as frequently as sponsored product ads. So one hack that I also have is I'll do the CPC display ads where you're essentially getting almost free impressions if the clicks are really low, where you're getting more like brand exposure, and you're not getting charged for those display ads unless someone clicks on them. Most sponsored display ads are VCPM, but if you set the goal as conversions, then it will be cost per click, or goal is CPC.
Yep. So moving on to number 7, ROAS isn't your North Star. So a lot of brands still anchor to, we need to hit this ROAS at the campaign level or in the aggregate. And there's just so much data available that makes benchmarking to ROAS not only a poor benchmark, but the wrong one. Do you want to dive into why that is?
Yeah, I mean, ROAS is a really useful metric, but it just doesn't tell us the full story. A high ROAS often comes from branded traffic and retargeting audiences who were already familiar with the brand. That can create the illusion of, strong performance without necessarily expanding the customer base. That's the first thing, is looking at blended ROAS. It's not a true view of incrementality. If teams optimize exclusively towards ROAS, budgets naturally gravitate towards lower funnel activity, and over time that can really limit acquisition and category expansion. ROAS keeps you focused on ad return in isolation. It tells you how efficient a campaign looks, but it does not tell you whether the business is actually growing. If you optimize only to ROAS, you naturally drift towards sometimes branded traffic, but sometimes, traffic that isn't incremental, you'd get it anyways, or traffic that isn't high volume and isn't going to impact your organic rank. That can make performance look really strong on paper when you're just looking at ads in silo, but it's limiting acquisition and long-term expansion. So what you need to do is you need to zoom out. Monitor tacos to understand how paid and organic work together. Tacos is ad spend divided by sales. So the percentage of your total sales that you're spending on ads. That's more of a scalable growth plan, because essentially as you're selling more and your revenue is growing, you can spend more. With ROAS, it doesn't take into account anything organically. Track your organic sales and your organic rank to see if advertising is strengthening your natural position. Look at share of voice and market share to understand competitive movement, and then pay attention to conversion rates because it directly influences how efficiently you can scale. Also, sometimes if brands, I've noticed, have like a really low CPC strategy and they're not getting like any top of search placements, their ROAS might be high just because their bids are set too low, but their conversion rates are low. So, you should definitely be looking at ad conversion rates on a search term level. You should be looking at what's happening organically. ROAS really can limit your ability to scale. And, how I think of it is, would you rather have a $10 ROAS and a 10% tacos, or would you rather have a $3 ROAS and a 7% tacos where you're more profitable? You're looking at the bottom line there. All of these metrics, they influence each other. Advertising impacts organic rank impacts tacos, conversion rate affects affects how impactful your ads are, as well as impression share and like scaling potential. If you only watch ROAS, you optimize a campaign. If you watch the full ecosystem, you optimize the business. So, brands that scale focus on broader growth indicators. Are we acquiring net new customers? Are we increasing our share? Are we expanding into, high intent terms? Efficiency matters, but it should support growth rather than restrict it. And I think what I've noticed is a lot of brands do not pull the trigger on DSP until it's too late and they've lost some share, because DSP is not going to net out straight ROAS. And that is why you need to be using AMC to look at the multi-touch attribution and different attribution layers.
But in terms of the question of moving away from ROAS with finance, you have the ability to calculate your P&L at a nascent level. We're not what you're seeing here is from iDerive on that top screenshot, but there's other softwares too for 1P and 3P where you can do this. We're not the only one. And then you have the ability to calculate your market share relative to your competitors and the market as a whole. So there's no reason to... then you have the ability to measure your organic sales versus your ad attributed sales and how that's trending over time relative to your ad spend. So you can actually measure how your ad spend is impacting your bottom line, how it's influencing your growth, and how it's influencing your business relative to your competitors in the market in general, which is what any business should be looking at. ROAS is somewhat irrelevant and doesn't indicate whether the business is growing in a healthy way or not. And so I think that's, as Don Draper said, if you don't like what they're saying, change the conversation. So that's what I would recommend if you're having trouble with finances, that you need to change the conversation and reorient them.
Yeah, that's Jason's favorite quote. The other thing that we roll into iDerive and some other companies I've heard do this, we have more advanced ROAS metrics, MOAS and LTV ROAS, where we're essentially it's margin on ad spend, and then LTV, so it's taking into account your costs, but also the LTV for a certain period. You can do like 365, 180 days, where you're able to see the expected future purchases that you'll get. So if you're like a subscription brand, or you are a CPG brand, where we know exactly like when people typically repurchase and what the average repurchase rate is, you can kind of sometimes expect to lower ROAS and lose sale on that first dollar if it's going to make up for it with sales down the road. But that's also a case-by-case basis depending on the brand goals and KPIs and their profits as well.
All right, we're going to race through the last three here, segmenting campaigns by goals.
All right, so next unlock is how campaigns are structured, not just how much we spend. So, leading brands separate their Amazon programs into three distinct roles: acquisition, brand defense, and retention. Each role really serves as a different purpose, using different targeting, and really should be measured differently. So acquisition is where we concentrate high intent, category, and competitor terms. It's really the entry points that consistently drive the first time purchasers. These live in dedicated acquisition campaigns, so budget is not competing with branded or retargeting activity. Brand and retention are intentionally isolated and optimized for efficiency. Their job is really to capture existing demand at the lowest possible cost, not to absorb budget. That's really like meant for growth. And then, beyond role-based segmentation, high-performing accounts also segment by match type. So like exact, phrase, and broad should not live in the same campaign. When match types are blended, you lose control over bidding and intent alignment. And we also push structure down to at least the product type or variation level. We avoid blending large product groups together. When campaigns are structured this way, each unit has a clear role. So the better campaigns are segmented, the more time it saves on optimizing over the long term as well. You gain visibility into what is truly driving performance. You avoid misleading blended ROAS, and you prevent overlap where, multiple match types are targeting or competing against each other. DSP then extends reach and, high propensity new customer signals, which reinforces exposure before and after search. When everything has a defined role and a clear structure, optimization becomes a lot simpler. You also get a lot more visibility into where you're spending, and measurement becomes more accurate. And, you create a scalable growth framework that funds expansion through efficiency rather than incremental budget. There's so many accounts that I've audited where the brands think that they're spending like 8 to 10% on branded because that's what they're targeting. But through like broad match and phrase match, if they don't have the right negatives in place, I've seen brands spend up to 50% branded without even realizing it, because, they had the strategy that wasn't segmented.
Okay, so in the interest of time, we're just going to move to 9 and cover 9 and 10 before taking a couple questions. So improving conversion rate. I talked about this obviously at the outset, that the ads is the lever to drive the traffic, but your PDP needs to be retail ready. Obviously, this is self-evident to a degree, but I would say that you also need to not treat it as one and done, and you need to continually optimize, especially for your top selling listings. Often that means rebuilding the foundation every so often and then making tweaks based on what's happening in search in terms of demands or in the category, or based on reviews and feedback that you're getting from your product, or getting from consumers who are buying your product. So you want to really make sure it's not set it and forget it. So on one end, brands need to work on optimizing things, and then on the other end, they need to make sure you're not just checking it off and never coming back to it. Anything else that you would add here, Harriet?
You hit the nail on the head.
All right, last but not least, building a year-round strategy. Harriet, do you want to cover that quickly?
Yeah, so I think many brands concentrate on planning around tentpole events like Prime Day or, Black Friday or T12. These moments are important, but they don't create sustainable year-round growth on their own. Also, when you're spending a lot of budget and you have like deep discounts, your margins are really getting crushed. Not saying that's not the right strategy for some brands. It's just not a one-size-fits-all. Consistent growth requires an always-on acquisition strategy. This means maintaining prospecting layers, supporting category expansion, and really utilizing DSP not just for retargeting, but when your budgets allow for it, for upper funnel awareness and some consideration. When demand is consistently really being creative and captured, tentpole events become accelerators rather than rescue strategies. Growth becomes more stable, forecasting becomes more predictable, and the business is really less vulnerable to seasonal volatility.
Great. So here's a summary of what we've already covered, the 10 categories. Our website is www.thinknectar.com. So quickly, so that we have a couple questions here. Mohammed, your question is about how to increase sales. I think your question is a little tough. I understand that your sales are slightly down. I think one general suggestion I have is to focus your spend on the products that can grow. Right? Often your ad performance is dictated by relative pricing dynamics and reviews. And most companies don't have enough budget to spend as much as they would want to on every single product. So I would say focus your spend on what can grow because you're competitive on price or you have good reviews, etc., as opposed to trying to make things work that don't. Also, it depends whether you're on Vendor Central or Seller Central and what's the dynamics of what's happening with your business, right? Some vendors, they need to move out inventory so that they can get more orders. So sometimes they have to make some tough choices about promoing or getting more traffic and promo and deals on certain ASINs to move them out so they can get more orders. So I would say that it's hard to answer your question precisely without knowing a lot more about your business. But feel free to reach out to us. I would say.
Go ahead.
Oh, go ahead.
I was just saying what I would say really quickly is focus on your hero SKUs. When you have limited budget and you have a lot of SKUs, if you're spreading that budget really thin, it's not going to move the needle organically. So focus on the 20% that's going to drive the 80% of growth. And then I'd utilize search query performance to see where there's where you might have really high purchase share and you're spending a lot. Like if you want to lean off of those terms and for 1 week and see if your purchase share stays the same, then you can unlock opportunities where you have low purchase share, high conversion rates, and low impression share.
So last question that we'll take is, can you talk more about the AMC AI SQL feature? Harriet, do you want to cover that one?
Yeah, absolutely. So when we talk about the AMC SQL feature, we're really talking about the ability to run like fully customizable queries inside of AMC to answer questions that really Amazon standard dashboards really aren't going to get to on their own. I think you're talking about the prompt where it's essentially creating a custom query for you. So at the basic level, SQL is just the language used to ask questions of the data. What makes this powerful in AMC is that we can define exactly how we want to look at customer journeys across every single ad type, all in like a privacy safe environment. But, this lets us move beyond surface level reporting, and you can really ask it anything you want. Like you can say, I would like to target, like you can build audiences off of it. I'd like to see an audience of customers who are browsing the pet category that are in the 30% of purchasers and, have spent over $1,000 in the past month on Amazon, knowing that they're buying a lot. So it's essentially, if none of the templates are getting you what you want and you don't have the ability to like have a data team at your fingertips to build those custom queries, you can ask Amazon to basically do it for you with their AI feature.
So there's a lot here. This webinar will be posted to our pages. I would say that, if you're struggling with any of these things or you're not sure how you're performing or whether your branded spend is incremental or whether your campaign setup is correct and you want a second set of eyes, don't hesitate to reach out to us. We're happy to walk you through it and how to do that. You can contact us through our website or on LinkedIn. And I hope that you found this valuable today. We're big on trying to provide actionable content that you can take back and use to improve your business. Thank you all for the questions today, and we hope to see you next time.